Ladies and gentlemen, Joshua Salvetti, welcome back to the High Performance Trader YouTube channel. And today we're going to break down the importance of learning to identify and adapt. Right? You guys know one of my most favorite sayings, right? And most profitable sayings and profitable ways to think is learn to identify market conditions and adapt to them. So in this lesson, we're really going to break down and dive deep and extensively on June 1st and how we identify market conditions, how we adapt to them, right? And found a very probable and profitable trade, right? So before we go any further, real quick, come check me out at the High Performance Trader over at Instagram. I break down every single day a daily recap, tons of valuable content helping you understand my strategy, what it is I'm looking for, right? I basically break down what I called out in the Discord, right? What critical levels I was looking to play on which commodity and how I respected those levels, respected the buyers, respected the sellers, and made probable trades and profitable trades depending off that information, right? So very good resource, right? Links in the description below. And also, ladies and gentlemen, check me out at the highperformancetrader.net. This link is also in the description below. Guys, this is super valuable stuff, super valuable resources right here. So over here, we're building a team of traders that show up each and every single day, that put in the work, right? That want to reach consistency, that understand it's a state of mind, right? So they come over and they check out this course, right? And they subscribe to the newsletter, right? So basically, I offer a course called Trader Bootcamp, which is insanely beneficial, right? It's free, right? It's not always going to be free, but it's free right now. You see over here, the lineup over here is crazy. I break down market concepts, right? Everything that you're going to have to understand, right? The auction. I break down how to identify market conditions, right? Areas of value, because we are price and volume analysis traders, right? We identify supply, demand zones, and we trade off them. We call them critical levels, areas of value, and whoever respects them, we trade with them, right? So I break all that stuff down, trading strategies, trading metrics, right? So I've been talking to a lot of traders lately, and most of one of the probably the most biggest and most common issue as traders deal with is not being able to stay in their trades, right? And that basically all comes down to trusting your self analysis, right? Your market analysis, trusting your ability to identify areas that price is going to head to, right? So we build this skill, right, with confidence, control, with conviction. And the way we build this and develop these traits, right, these winning, successful traits is through trading metrics, right? Logging and recreating, right? We have a whole section on the Discord for this. I log every single trade, right? Really cool stuff because you cannot become successful if you do not know what works. And if you can't measure yourself, right, or your trades or your success, you're never going to understand what it's going to take to reach consistency, right? So we break that down in Trader Bootcamp. We also break down trader accountability, self-awareness, guys, and most importantly, limiting beliefs, right? So if any of you guys have read A Disciplined Trader or Trading in the Zone by Mark Douglas, he touches on this. But in a nutshell, if you do not think or believe you're worth the success, you're never going to hit it, right? Ladies and gentlemen, it takes time, right? But you must develop the mindset that it's going to take to become successful. You must trust yourself. You must believe in yourself that you are the best trader out there because you're going up against sharks, the George Soros, the Warren Buffetts. You're trading with some of the most smartest people out there that have insane amount of capital. And if you do not believe in your ability to identify and adapt, you're never going to make it, right? So we break down how to control the subconscious mind and start to understand your true worth, right? And it's not just believing it, it's earning it. So we break that down, guys. Super valuable resource. You must get involved. It's free. You have nothing to lose. Oh, and the other course, right? Real quick, market philosophy, right? This is a super valuable course breaking down our edge, right? $200 one-time payment, member for life. You are a high performance trader member for life. You're in the Discord for life. I show up every single day at 6 a.m. breaking down levels, extensive recaps on days, profit losses, right? You're part of a team that holds each other accountable. We show up weekly on Saturdays, breaking down the week. Every single week, doesn't matter if it's Christmas. I don't care. Falls on a Saturday. We're doing a recap, right? Because that is what we are willing to do. That is how far we are willing to take it to become successful in this game, right? And you must become obsessed. You must push yourself like no other. You must have the discipline, the urge, the desire to reach consistency, right? And if you do, come check me out, come check out this team, and we will get you there. I promise I will offer every resource you need to get profitable and consistent, right? And if you just want to come check it out and really push yourself and learn to identify very good trading setups, once again, guys, get involved. This course breaks down price and volume analysis, process development, market psychology. There's live setups, tons of super valuable stuff. So without further ado, let's break down June 1st. So the day I'm talking about over here is June 1st on the S&P 500. And now the purpose of this video, guys, is to help you see things a little differently, right? So for a while, I was a trader, right, that would show up every single day and just thought consistency came over time. And in a way it does, right? But if you're not putting in the changes, right, if you're not changing the way you think, if you're not changing the way you perceive, if you're not changing your expectations and beliefs about yourself, the market, and success, you're never going to reach consistency, right? So one thing I had to learn to become a consistently profitable trader is 4 words. I identify and I adapt, right? We identify, we adapt to market conditions, right? So being able to identify market conditions is one of the most, if not most important attribute of being a consistently profitable trader, right? So we're going to break that down in this lesson. So the ability to identify market conditions, right? So in a nutshell, what does that mean? That means, well, let's bring it back. Us as retail traders, we cannot move the market, right? Smart money has their hand on the ball. They can control price action. They have enough money, they have enough capital, they have enough influence to actually bid prices higher and bid prices lower, right? They can move the market in between levels because they have that much money, right? This is an auction. When the demand is high, price goes up. When the supply is high, price goes down. It's that simple. It's the only thing that moves the market. So when I say identify to market conditions, I'm talking about identify who is in control. Is it buyers? Is it sellers, right? That's it. That's the only 2 answers, right? Buyers are in control. Sellers are in control. That's it. So we must identify who's in control. So I am a day trader. I get in and out of the market intraday, right? So for me to do that, I must understand who's in control of the market on a larger time frame analysis and understand the momentum, right? So guys, the market's always referenced to like a river, an ocean, right? Because it's flowing a specific direction, right? So even though that direction changes, right, you must understand. You don't need to understand physics to do this. You got to just understand one word: momentum, right? Momentum. Things are rolling. Things are moving in a direction. How do we identify bullish or bearish directions, right? Well, in a bull trend, you're making higher highs, right, and higher lows. In a downtrend or a bear trend, you're making lower highs and lower lows, right? So currently, because of NVIDIA's earnings, the debt ceiling's been raised, right? We have been in a bullish market, right? We're making higher highs. We're making lower highs, right? Look, we're continuously putting in higher highs, lower highs. Demand zones are being respected. And so the way I trade, right, is first you identify who's in control. Large time frame, right? Weekly, right? Wow, look at this. I can't believe this. You know, for everything the world's going through right now, I'd say the market's doing phenomenal, right? So we're making higher highs, we're making lower highs. So then I'll drop down to the 4-hour analysis and really understand some key levels here, right? So we got critical levels over here. 410's been respected. We got resistances over here, 420, that are being hit and busted through. So how do I break this down? Then I go to the 1 hour, right? So this is what it looked like here. And now I'm going to break down what I put in the Discord. So every single day, pre-market plan, pre-market analysis, right? I post these every single day around 8:30. I break down a bullish and bearish scenario, right? So before we go any further, let me just show you what it looked like before analysis, right? So I'm going to pull out the 15 minutes, one of my favorites. So this is what the market kind of looked like here. Now, hold on one second. We're going to do the 10-day, 15-minute, just kind of give us a general idea. Right. So this is what the market looked like. We've been making higher highs, remember, on the 1 hour, we're making higher highs, we're putting in lower highs. and the market comes down for a retracement here, right? Now, there's a couple different ways to do this, but first of all, you could whip out the Fibonacci retracements, right? And you can see we hit that 50% on the money, right? So this is a great way to learn to identify who's in control. So if price rips up and comes down 50% and buyers step in, that's telling you buyers are still defending price, right? That's one very good way to understand it. Another way is to draw a trend line, right? Connecting all the lower highs and, look for a breakout. But the best way I like to do it is just identify demand zones and some critical levels and see who defends them, right? So that was my goal here. This is what market looked like. And then I also will check out some market leading equities, right? So NVIDIA has been just flying, right? Great earnings. They're almost $1 trillion market. They're almost $1 trillion commodity now. And they're doing very well. Definitely a stock and play. And I don't care if you trade futures, you must learn to identify market leading equities because they are what control the market, right? So this is what NVIDIA looked like, right? Now notice I have a trend line and I have a critical level, right? A critical level. If buyers hold this level, I am now looking for longs, right? If sellers hold this level, I'm now looking for shorts. Notice I'm choosing to let price action tell me who is in control by respecting certain levels, right? Because if this level gets respected, there's a higher probability that price is going to rip all the way up to 403, right? And it's literally price rips. If sellers respect this level, there's a super high probability that price is going to go down to the next demand zone, right? So if NVIDIA could break and hold this critical level, I'm now looking for the market to also do the same, right? So the purpose of this lesson is to help you guys make more probable trades, right? So basically what I mean by that, right, is you don't want to make the best trade. Or let me rephrase, because the best trade is the most probable, right? You want to make the trade that has the highest probability of working in your favor, right? So let's break out what the pre-market plan said. So SPY bullish scenario, looking for buyers to defend two areas today, right? Yesterday's lows at 416 demand and end of day at 417.85. If buyers can hold 418.79, I'm really bullish playing calls targeting 420.92, then potentially 422.5, right? And here's the graphical presentation of what I'm expecting the market to do. We got a demand zone here at 416-ish. If price can come in here, which is yesterday's lows, I'm looking for buyers to step back up, defending this area. If buyers defend this area, right, that's a bullish indication. Now, the next one I put was end of day. If buyers respect 417.85, right, that's telling me buyers are in control, bullish indication, right? Then I had this 418.79 level, which was previous day high. If price can get above previous day's high, that's telling me buyers are in control. It's a bullish indication. And this is when I'm looking to play longs, targeting the day prior's high, right? Because these are levels, critical levels that have been respected before by either buyers or sellers. So once the market makes a reversal, these are the first areas I'm targeting because these areas had large volume. These areas I have large interest. These are areas smart money makes moves, right? Remember, we can't move the market. Smart money can. So my goal is to identify these areas, identify these levels, and adapt, right? Identify, adapt. 2 words. So that was my bullish scenario. Now look, I always also put a bearish scenario because it's super important to never get biased. Yes, we're in a bull trend. Yes, demand zones are being respected, but that does not mean, right? That does not mean that this is a slam dunk to the upside, right? Once you start to predict is when you start to lose. You must beat it into your head daily, subconsciously. We do not predict the market. We react to price in specific areas. It's that simple, ladies and gentlemen. We let price come to specific areas. In this case, it's 416 demand, it's 417.85, and then it's 420.92. If and when price comes to these areas, I'm looking to see who is going to defend them. If buyers defend them, I'm looking to play longs targeting previous day's highs. That's it. That's literally it. That is all I do, right? I know it sounds like a lot, so now we're going to break it down. But real quick, bearish scenario, I want to see sellers defend 416.27, right? This was previous day low. If sellers defended this, I was looking for shorts targeting 413.55. Now notice, once again, I'm not predicting. I'm letting price come to specific areas and reacting, right? If you trade this way, I promise you, you will become successful, right? So remember, you must keep an eye on Nvidia, Apple, Tesla. Right now, these are hot stocks in play and are definitely moving the market, right? So remember, guys, you must, right? Just like I showed you with Nvidia, Nvidia had strength. I watched that strength come through, and that helped me make a profitable trade to the upside. So, anyways, we got demand over here. Price sells off below end of day. Very bearish indicator. But remember, we have demand right here at 416, yesterday's lows. Now, they're yesterday's lows because buyers defended it. If buyers defended it, I'm looking for buyers to defend it again. If buyers defend it again, remember, we're targeting end of day to look to see what happens there. Notice I'm not just hopping in this trade, right? Notice I'm not going, okay, if buyers show up here at 416, I'm going long, which would have been fine, right? I probably would have made more money, but that is a more riskier trade, right? Because, yeah, buyers can step in, rip right up into VWAP or end of day, and then sellers take over and price rallies all the way down to 413. I don't want that trade, right? That's putting much more, I don't know, variability, risk, right? I want the most probable trade, right? I want the trade that I know has the highest probability of working in my favor. If I trade like that, I will have a higher win ratio. And if I trade with money management and risk and proper risk reward, there's not a chance I could fail, right? Because the most reasons why traders fail is they don't have proper risk reward, right? And they don't make enough winning trades. Now, what if I told you you can randomly pick a long or short? Doesn't matter. Say there was a piece of paper underneath a hat, right? And you had two hats. One said long, one said short. And you just randomly picked one every single day. But if you demonstrated proper risk reward, you would still be consistent. Crazy, right? Insane. That is literally what it comes down to, ladies and gentlemen. And obviously, the odds are way more heavier in your favor if you have proper analysis, right? But I've seen large traders on Wall Street, right? And they told me proper risk reward is all it takes to become consistent. That's why 90% of traders fail. They can't demonstrate rational enough behaviors of proper risk reward, right? Because they let their losers run, right? And they get out of their winners too quick. We call this eating like a bird and shitting like an elephant, right? Got that from Mark Douglas. But I don't want to just hop in at demand, right? I want the most probable trade. Purpose of this video. Now watch how this works. So remember, identify and adapt. So we're still in the identifying stage, right? We're still identifying who's in control of the market, right? So price comes down to 416.78, doesn't come down to the same double bottom, right? And buyers start to show up. You get this large engulfing buying candle, right? Super bullish indicator. Still, you don't just rush into it. You react to price action. So now I'm looking to hold above yesterday's highs, right? Because if we can get above yesterday's highs, there is a high probability that we're going to rip all the way up to 422, which I literally got from the day prior's high, right? Right here, 422.49. So if we can defend 418.95, my first target's 420.90, right? Because there was a seller there and a seller here. So 420.90, then 422.50, right? So price then bounces off end of day, right? Let me whip out the 5-minute. Price bounces right off end of day, rips up, comes down. Here's end of day, 417.85. Buyers defend it, right? So this is where we first got in the trade, right? Because we defended demand, we defended end of day, and if you pull up Nvidia, right, at this exact time, Nvidia was respecting that critical level, right? Pull out the 5-minute here too. So right here, this candle right here, let me get rid of this trend line. At 10:30, Nvidia is respecting this critical level, right? Respecting pre-market high, break and retest off pre-market high. Lovely setup, right? So now I'm doing the same thing on Nvidia. If Nvidia can respect this level, I'm targeting this level, right? That's it. So now the chances of price ripping above this critical level and selling off are extremely low. So now we are in a very high probable setup. We used in market leading equities. We used areas of value, critical levels, right? And we are now reacting to the way price action reacted in these levels, right? Nvidia holding a critical area of value, right? SPY defending end of day, defending demand, right? So now if we could get above 418.95, we're going all the way. So my first target's now 418.95, which was previous day's high, right? Because there still could be a seller right here, right? There's a chance. What does price do? Rips right past it. Boom, right? Now we are doing nothing but waiting for price to play out, right? There's a couple different ways you could trade this. You could take profit. You could sell some contracts. But remember, eating like a bird, shitting like an elephant. I'm here to trade my process, right? I'm not here to make money. I am here to trade my process. If I trade my process, I make wealth. I make longevity, right? I trade properly when I trade my process. I can't just go, oh, I'm up, $2,000, I'm out. No, that's not how it works. If you trade that way, you will fail. And there's no reason to get out of this trade right now, right? So literally price holds bull flags above pre-market high, right? Another critical level right here. So, and remember, I'm always talking chart pattern in a zone, right? This is a bull flag in an area of value, pre-market high. So, what's a bull flag? A bullish chart pattern. Stay in the trade, right? Now, look how this plays out. Price literally rallies to our first target of 420.90, right? Blows right past that. And then our second target's 422.5, right? Price rallies, bull flags again, consolidates. There's no reason to get out of this trade, right? Especially when you're breaking retesting this way, right? Now, we really flesh this out in other lessons, other courses, but the break and retest will seriously tell you who's in control of the market, right? Here's the first break, first retest, second break, second retest, price rallies, finds consolidation right here, breaks, retests, rips. Look at another break, another retest, rips, right? So learn to identify the break and retest in live time and see who's in control, right? And then price literally rallies all the way to our target. Now, all what I did here was identify a critical level, right, which was 418.95. And if price could hold this, if buyers could hold this, I'm going long, targeting previous day's highs and lows. That's it. Right? Identify critical levels, who holds them, buyers or sellers, go long or short, trade with trend, with market conditions, and get paid. Right? So this is what we do every single day over here, High Performance Trader. We break this down extensively, right? Get involved, hit the links below. Guys, like, comment, subscribe to the channel, get more involved. Remember, you get what you put into this, right? I'm Joshua Salvetti. Make sure you subscribe to the channel, and I'll see you in the next lesson.